Question number 6, the Honourable David Cunliffe.
Speaker, to the Minister of Finance, has he asked the Treasury to re-estimate the projected sales revenue from his proposed privatisation policy in light of Contact Energy's share price falling 20% so far this year?
The Honourable Bill English.
Mr Speaker, first can I correct the member? It's a policy of government control of these energy companies with a sell down of up to 49%. But secondly, the change in the Contact Energy share price highlights the risks to taxpayers from owning commercial assets. As a rule, government are poor at managing these risks. Part of the reason for the share price weakness, I'm advised, for Contact Energy is that they made a rights issue to raise $350 million for a new geothermal plant. This is a key benefit of the mixed ownership model because it gives companies access to capital to expand without having to come to the government to compete with schools and hospitals for capital investment.
Point of order, the Honourable David Cunliffe.
Mr Speaker, the Minister hasn't addressed the question which asked, and I repeat, has he asked Treasury to re-estimate the projected sales revenue? He didn't go near that question, sir.
Well, he did answer the... if the Minister could answer that part of the question, be helpful. I appreciate that. The Honourable David Cunliffe.
Speaker, has the Minister either sought or received any other advice in respect of either the timing or the total value of the proceeds of his part privatisation program in light of the carnage in international equity markets in recent weeks? And if not, why not?
The Honourable Bill English.
Mr Speaker, no, because the government's not getting ahead of itself. We've always said to the New Zealand public that we would pursue this policy if we were re-elected in the context of an upcoming election. There's no point in the government taking advice about whether to float those shares now or not.
Point of order, the Honourable David Cunliffe.
I seek leave to table page 159 of document B2 and B3 of the budget, which shows the cash flows the government...
The member... Order, woo! The member can't use that tactic to try and make a political point. He must ask a question. The Honourable David Cunliffe.
Mr Speaker, can the Minister confirm whether the cash flows shown on page 159 of budget document B2 and B3, which show 100 million transferred from the balance sheet into new capital spending in 2011 as a result of asset sales, 650 in 2012, 800 in 2013, 1.6 billion in 2014 and 3.6 billion in 2015. Can the Minister confirm whether those estimates of cash flows, which in part derive from his partial privatisation program, have been changed in light of the carnage in international markets, or had he not noticed?
The Honourable Bill English.
Well, Mr Speaker, the Treasury will no doubt update their cash flow statement in line with their statutory obligations and in the run-up to the election. But the member can't have it both ways. I mean, either these are gold-plated assets with absolutely certain value and dividend streams, which he's counting on for the next 10 years, or, as he's pointing out today, they are risky assets whose share prices could fluctuate because their customers disappear.
The Honourable David Cunliffe.
Which of the following two positions the Minister has just taken is in fact true? That there is no timetable for realising the proceeds from SOE asset sales, and that therefore there was no need to take advice from the Treasury on the impact on those sales of the carnage in financial markets, or in fact that there is a timetable represented by the page I've quoted in his budget, and that therefore he should consider those matters, which he now says the Treasury will update. Which of those two positions does he hold to?
The Honourable Bill English.
Well, Mr Speaker, the government is stuck to one timetable, which is that if it is re-elected, then it will set out a program for the retention of 51% control by the government of these companies and the sell down of 49% of these companies to Kiwi mums and dads. The events of any particular week with respect to fluctuations in the markets over the next few months are pretty much irrelevant to that timetable.
Aaron Gilmore.
Thank you, Mr Speaker. Supplementary to the Minister. What other implications has he drawn from recent volatility in markets?
The Honourable Bill English.
Well, Mr Speaker, the volatility in the share market shows that it would be risky to borrow to invest in share markets, because while that looks like a sound proposition when markets are going up, it doesn't look quite as sound when markets are dropping or showing considerable volatility. It's one of the reasons why the government suspended contributions to the super fund a couple of years ago, because we didn't believe it was appropriate to be borrowing money in volatile financial markets to invest in volatile share markets.
The Honourable David Cunliffe.
Is it correct that New Zealanders therefore have three options in regard to his part privatisation program: spending thousands of dollars risking money on the stock market to buy assets they already own, not buying shares and seeing those assets sold offshore, leaving the country more exposed to international markets, or voting out his government on the 26th of November?
The Honourable Bill English.
Well, Mr Speaker, they will certainly have the opportunity to vote for or against the government in an election in November, and I expect at that time they'll take the opportunity to vote for or against, and probably against, plans for higher taxes, more spending and excessive borrowing, which is what he's proposing.